What is happening, future debt-free millionaires? Hey, this is Zach Edwards for another episode of the Debt-Free Millionaire podcast and personal finance course. That's right, we're going to go through everything personal finance. Today is not the best of topics, but you actually might find it very interesting. Again, we're talking about taxes. Yes, we're jumping around a little bit, but there's reasons why we're jumping around, especially when it comes to the game that we're producing. So when you're listening to this, you're going to be playing the game and you're going to see a lot of the reasons why we're talking about it, all these different topics in the rate that we're talking about. But we're also switching it up so that you can have a variety of things. If we were just going on from one thing to the next, you might get to a point where like, I've already heard about these things. So we're mixing it up for you and for us. I mean, we want to be able to keep it interesting. Today we're going to be talking about everyone's favorite word, taxes. That's right. The shadow that goes over all of us that we all have to be worried about when thinking about how much we make. Okay, what are taxes? So as explained before, the government needs to be able to earn money to fund its programs. Funny enough, they don't earn anything. You earn it and they take it from you. They don't even ask it for you. It's mandatory. You have to give it if you're going through a W-9 employee relationship. If you're going through something like Uber or Grubhub or any of those side gigs, they'll take it from you afterwards. If you don't report it, you'll get in a lot of trouble. And also, there's other ways of making money that you don't exactly have to mandate taking the money, but paying taxes. There's only two things that are sure in life. This comes from Benjamin Franklin. Death happens to everyone, and taxes. Everyone's going to be taxed. And if you don't pay your taxes, they're going to come after you afterwards for those taxes and a bunch of fines as well. So who does this? This is the IRS, the Internal Revenue Service. The IRS is known for bootlegged thugs that come out to your house. No, they're not bootlegged thugs. They're people that work in cubicles. They're accountants. They're actually, funny enough, normal people, but work for a very forceful and very strict organization in the government, department in the government. So the IRS is actually made up of normal people that are just trying to do their job. So if somebody shows up on your doorstep and says that they're from the IRS, well, most likely they won't do that because they'll send you a letter. But if they do show up on your doorstep, they're not some evil people. They're just trying to do their job. And as a U.S. citizen, you are actually obligated to pay taxes. But let me hint you in on something. You are not obligated to pay any more than you are made by law. You are not obligated, I'm going to say this again, you are not obligated to pay taxes any more than you already are told to in the law. Which means if you can find a way to get out of those taxes, it is in your right and it's your responsibility to your family, to yourself, to everyone, to be able to get out of those taxes. You only pay what you're supposed to pay. That's it. It is mandated, and I'll explain that as we go forward. So yes, if you want to pay more to the government, go right ahead. It's your money. But don't mandate us as the citizens to have to pay more, especially if we don't like some of the departments that they put together. So long story short, the U.S. government actually used to be quite small. During the time of Abraham Lincoln, before Abraham Lincoln, there was no income tax on your earnings. It was raised off of other things such as import taxes and such. It was all of a sudden when major wars came up and such, that we started to tax everyone. And I'll get more into that as we go. So let me just say this. If you have not paid your taxes, if you're an adult and you have not paid your taxes in a year, 2 years, 5 years, go find help. There are forgiveness programs. And if you want anything from the government, you're going to need to pay up on these things. So it is your obligation, again, to pay taxes. Even if you don't like to, it is still your obligation to pay taxes as a citizen, as is the laws. Now, when Britain basically owned much of the United States, much of the 13 colonies, we were taxed The colonists were taxed, and it was given to the king. But this is the problem. We did not have any representation in England to represent our needs. So that's why the term taxation without representation was so prevalent in that time. And it is today. But the thing is, in the United States, as per the Constitution, we're not in a democracy, we're in a constitutional republic, which means republic meaning we're represented by those we have elected. And you can't say, well, I didn't elect this person. Well, it's true. You didn't elect that person, but because you have an opportunity to elect, you are being represented. And that person, even though he may be part of one party, he is actually supposed to do the best for the state and represent everyone in their state. Though things have become very political, especially taxes. It's one of the most political things you can talk about. But because of taxes, because of the Constitution, we are being represented in Washington, D.C., which means anything that's signed into law in D.C. is our obligation to fulfill. And yeah, we might not like it, but if the legislature passes it, then it is law, unless the Supreme Court knocks it down. Now, the executive branch, especially under Biden, has become almost a dictator in a lot of things because he is mandating certain things. He changed Title IX. That did not go through the legislature, and because it did not go through the legislature, it is illegal for him to do what he's trying to do through Title IX. He's done other things that have they are called executive orders because he's from the executive branch. He can write certain things into not law, but into regulation. And because of that, we have to follow that. Now, if the Congress would get a fire on their butts and actually do something, then we would have different changes. Like if we have an issue with the border, the legislature is supposed to do that. Now, the legislature, again, very political, if they pass something, the executive branch is supposed to do it. Well, the problem is we actually have laws in the books for immigration, but our executive branch will not do that, which is why they've gone to court so many times and been shot down. They put something up, it's been shot down by the Supreme Court. The truth is, the Supreme Court should not have to shoot down things that come from the executive branch or even things that come from the legislative branch. Both parties, both branches, are actually obligated to live under the Constitution. But if they don't hold up to the Constitution, then they need to be regulated by the Supreme Court. And that's what the Supreme Court is doing, where they go through and they take laws or court cases that are in play and say yes or no to certain things. They will go through and regulate certain things according to the Constitution because they are the arbiters. They're the ones that actually tell us what the Constitution means and if certain laws that are passed by the legislature or the executives are holding up to the Constitution. Such as if the executive branch tries to do something without the legislature and it is not their part to do it, the Supreme Court is obligated to shoot it down. It doesn't matter if there's 9, 12, 15, 20 of them. And of course, because it's political, right now, the DNC, the Democrat Party, is actually trying to get more people in the Supreme Court because they want to have the power. They want to be able to put all their people into the Supreme Court. But that's what makes the Supreme Court so perfect as it is. Because we're supposed to have, again, Supreme Court justices are chosen by the president, but the legislature is the one that has to pass them. The Senate, specifically. So, because of that check and balance, we actually have a fairly fair and constitutional government program. The branches and everything like that, everything that was set up by the Constitution, by the Founding Fathers, is actually great. It is actually made how it was supposed to be. The Constitution was supposed to be set in stone. Here is the Constitution. If you want to make changes, you have to put it through the legislature, who will actually change the laws or add to them. And if it's not passed by them, the executive branch is not supposed to do it. Executive, let me just say it, executive branch. Executive means execute. They're supposed to execute the legislature's rules and laws that they put together. Every branch is supposed to be balanced and equal, but because of politics, they have not become that way. And so all of a sudden, we're going to have all these issues. And if you're upset with me for taking on Biden, I'm going to do the same thing with Trump if he becomes president. I'm going to just do the same thing with the next president. Whoever becomes president, if they do things that are not constitutional or not right in any way, financially, I will be talking about it on this podcast. Such as, we've already talked about, the balanced budget. We have not had a balanced budget since Clinton. Thank you, Clinton. Thank you, Newt Gingrich, for giving us a balanced budget. We haven't had a balanced budget since. We haven't even had a balanced budget altogether for many years, and only a few times since Clinton. How poor is that? We are a government that can't get their stuff in order and actually do the things that they're supposed to do. It's horrible. It is absolutely horrible. And so basically, taxes came in. Let's go back to taxes. Taxes came in when the Civil War was fought. There was so much money that was lost in the Civil War that was spent that we actually had to dip into other means of getting money, which is why Abraham Lincoln actually filed the first income tax. And so it was supposed to be temporary only until we could actually recoup the money from the Civil War. Now, the Treasury became so flush with money that it was repealed. That it was removed. The income tax was removed, so we didn't have to pay it. But then Congress, again, we elect them, so they're the ones that are supposed to be able to rule this. In 1894, they actually ruled that an income tax is constitutional. Now, it's actually written into the Constitution that it's not constitutional, but they were actually able to make an amendment to make it constitutional. Again, this is the legislative body that was supposed to be able to do it. The president is not supposed to be able to do it. He has to go through the legislature, which is why, again, our system is so well put together. Okay, even if you don't like it, especially if you don't like it, if there are things, if they're doing actually things that are right and you don't like it, it's because you're being political and it's because you don't like it. At the same time, do we want to change it? Yeah, sure. Every side wants to change it. So put people in office that will change it. That is the constitutional way. Okay, going forward, so ever since 1894, the government has been taxing us. So let's go over here. Let's go to the next slide. So this is how it's set up. You get a gross income. You get a certain amount of money. Now this is how it is today. I'm going to go back into what it was before. But this little green area is called the standardized deduction. That's how much every person should be able to write off to a point. So if you're making $120,000, you should be able to write off $24,000. If you're making $70,000, you should be able to write off $24,000. This is the standard deduction that's being taken from everyone. Okay, and it is taxed at 0. Okay, now the next set of money then goes into different. Now this is the taxable income. These are all the taxable incomes. This is different. I'm going to tell you about that in a second. This is taxable incomes. So this is basically the money that you get from your W-9 9-to-5 job, plus the standardized deduction that was removed. But taxable income, say you have $81,000 worth of taxable income. So the first bracket, and we're going to go over the brackets really fast because we've already done it before. Out of the $19,050, a small amount of taxes is taken out. Out of the next set, more is being taken out. And every tax bracket above, so this is not even the top tax bracket. Every tax bracket above, more is going towards your taxes. These are all your taxes that are being collected. They're not being taxed from the standardized deduction because that's automatically deducted from your income when you file your taxes. Now, the capital gains, this is basically what you earn from a sale of a home or sale of a product, sale of a commodity. That amount of money is basically makes up the gross income that you had into your household, and that is, in this example, it's $15,000. And in here, a small amount of taxes, not a small, you'll actually see why I say that, a part of it is taken out for taxes. So in the end, taxes go to $11,949. You keep $108,051. So that's the difference. This is where the two bodies of money go before it goes to anything else. Your benefits, your whatever. Everything else, there's nothing else minus this, because this is where you start pulling out for your employee benefits, or after you get your paycheck, you start buying other things. We're going to actually teach you how to get out of taxes as much as it is legal to get out of taxes. Now, just to know, I'll go through the actual history. Now, this might seem boring, but listen to it. You're actually going to see a lot of different changes in the tax code and why this is actually somewhat interesting. Okay, so let's go back all the way back to the Civil War. There was a 3% tax on everything over $800. So if you were earning $800 or less, which the average person was earning $800 or less, then you had to pay taxes. And so this was created in July 1st, 1862. And it was repealed in 1871. So it was there for 9 years to recoup the money for the Civil War, to pay back all the debtors, including other nations that the US government owed. At that point, before 1871, we had no debts whatsoever. All the taxes had paid for all the expenses. Okay, so what happened? Well, 1894, you know that Congress reenacted the income tax and made it a flat tax. Everyone paid for a certain amount per them based on what you earned. And this was actually upheld by the U.S. Supreme Court. And they first off ruled it unconstitutional. And then later on, well, I'll go into it. Woodrow Wilson came into play. The IRS was enacted and Form 1040 was designed. The 16th Amendment to the Constitution was enacted, adding income tax to our nation. Okay, so the Supreme Court had knocked it down as not being legal back in 1894. And when they tried to put in a flat tax, this again was a Congress. Because Congress was doing something that was unconstitutional, the Supreme Court knocked it down. It was unconstitutional. So what happened? Under Woodrow Wilson, he got the Congress to actually do the 16th Amendment to the Constitution, which enacted income tax. And because of him, they created the different brackets. So let's see. No, actually, he started off flat. It was later on that we started doing the brackets. So let's see, I'm looking at my notes. 1916 increased it to a 2% tax. That was during World War I. Okay, so then it was increased in 1917, 1 year later, from 2% to income over $1,000. So anything over $1,000 was taxed. And the surtax increase was to 63%. 2% to 63%. Holy cow. How in the world can we do that? Look at this. This is the chart right here. 63% actually got a little bit higher. Let's see. I don't have it in here, but by 2019 or so, it was just above 70%. That means everything over $1,000 was 70% taxed. That means that the government, for every $10 you got, you kept $3, they took $7. Ouch. That was horrible. I don't know how people really lived in there. Again, that was over $1,000. So anything under $1,000 was taxed. Increased again. I'm trying to get all of this history again. So yeah, it was 2% for income over $1,000, and then there's a surtax increased to 63%. So a little bit different than what I was saying before. Okay, so in 1920, government revenues were at $6.6 billion. And during the Great Depression, which actually some of these taxes were actually part of that, the tax revenue decreased to $1.9 billion. So it went from $6.6 billion, because there's so much money, like the roaring 20s, and then all of a sudden, with those high taxes, boom, the revenue became $1.9 billion. It lost a third of the revenue because during the Great Depression, no one had money. minus the very, very wealthy. And even some of the very wealthy ended up committing suicide because of that. Okay, so Herbert Hoover came in a little bit after Woodrow Wilson, and he actually increased it again, and this is 2029, so we're up to, so they had actually dropped, so let's see, Woodrow Wilson was president up to here. All of a sudden, when he was thrown out, and I don't have it in my notes, I should actually have it in my notes, they actually dropped it. So when Woodrow Wilson lost and a new president was established, they dropped it down to about, the highest bracket, about 25%. Great, okay. So then, for the lower income, and as you see, even the lower income also dropped. But it was actually increased with Herbert Hoover to 4% for anything over $1,000. Okay. And then, again, the highest earners were at 63%. And that was, let's see, 33. Yeah, here we go. This is where wow. I got to say that being a president, that would have been interesting. They would have to just say President Hoover, because they didn't want to say Herbert Hoover. Herbert Hoover, Herbert Hoover. You know you're going to make mistakes there. But then they also created the corporate tax and increased it to 15%. Okay. Franklin D. Roosevelt. Okay, so everyone loves talking about him from Annie, right? Franklin D. Roosevelt was such a great person during World War II. Except what he did to the nation. Okay, what did he do for the nation? To the nation. 1944. Look at those tax rates. And then again, increased it again. Yikes. He was in office for 12 years. It was not 2 4-year terms. This is where we basically said, what are we doing? We need to limit them. I mean, Woodrow Wilson, look at that. Woodrow Wilson was in, well, okay, he was only in for 8 years as well. But Franklin D. Roosevelt increased the taxes dramatically, extremely. Again, this is also where in 1935, Social Security came in. And by 1945, they had to increase taxes because a lot of that went to their seniors. So, yeah, ouch. So it went from him as a Democrat to Harry Truman, who also increased it or kept it high, and they kept keeping it high. But you know who dropped it? So Harry Truman, Democrat. Franklin D. Roosevelt, Democrat. Herbert Hoover, well, back here, was a Republican. But get this one. Okay. JFK. Thank goodness for JFK. I'm actually really sorry that he got assassinated because he's a great president. He did a lot of things, from what he was doing with civil rights to what he did to taxes. 1964. Look what happened at 1964. They started to drop. And he was very popular for it. And then he was murdered. And Johnson also had to drop it because that's what everyone was pushing for. After JFK had actually pushed it for the Revenue Act of 1964, Johnson was under a lot of pressure to also put it in there too. So that was up to 1969. So up to 1969. So then it was very flat. Everyone kept it very flat. Who dropped it? Who is that dropped it? That was none other than President Ronald Reagan. Ronald Reagan had dropped it from 70% to 50%. Still, the highest tax earners were still being taxed at 50%. And again, he actually did multiple tax decreases, so that in 86, guess what happened again? Boom! He dropped it again to 29%. For that, again, that was the top earners. But look what happened to the lower income as well. Everyone was paying less taxes. So that's great. And you can actually see the, rated up to $20,000 has basically stayed pretty steady since then. We've actually dropped for a time through the Bushes. we actually dropped the lowest income to near 10%. And now it's gone back up. And it's actually gone up dramatically ever since Biden came in because, well, okay, I'm getting ahead of myself. Okay, so George H.W. Bush, another Republican, right after Ronald Reagan, he was his VP, became his the next president. He actually raised income taxes with the Omnibus Budget Reconciliation Act of 1990, which raised the taxes up to 31%. Now, again, let's see, 1990, right here. So you can see Reagan dropped it to here, and the Bush Sr. increased it. So what happened? Where was Bill Clinton in this? 1993. Oh, I think, yeah, 93, right here. What did Bill Clinton do? Look at that. He dropped taxes. Another Democrat. He dropped taxes. Yep. So it's supposed to be the Republicans that are dropping, but it's not always. Actually, with the help of Newt Gingrich, Gingrich was actually able to force Bill Clinton in his second term to actually balance a budget. Because he didn't do it in the first term. He passed a balanced budget, which means we didn't spend more than we made in taxes. Before, they were overspending, and the debt, actually I should bring that graph up. The debt was actually compiling, and it was adding on all the time. But because of the balanced budget amendment, or balanced budget, you weren't able to. Now, they spend hand over fist. This is not just Joe Biden. This is Trump. This is Obama. This is Bush's. Everyone back to Bill Clinton were basically not living off a budget and were spending more than they were bringing in with taxes. So what's happening? It's not the adults that are ever going to have to pay for this. This is my kids that are going to have to pay for it. Well, I'll have to pay for some of it, but my kids are really going to have to pay for it. Your kids, I don't even know if a country is going to be around anymore if they can't get these things under control. Now, as you can see here, we stop at 2011. So George W. Bush lowered the income tax again, and then stayed pretty steady. Then Obama came in. What did Obama do? He raised taxes. Yep, he raised taxes. Even for the lower end, he raised taxes. What did he do for the higher end? Well, stayed pretty steady. He was in office from 2009 to 2017. Now, what it doesn't show here is that he actually did raise taxes for the higher income, but the lower income basically stayed the same. Plus, he also created the Obama Affordable Care Act, which people have also called Obamacare. It's 2010, and this was actually considered because they actually pushed it through the U.S. Supreme Court, and the Supreme Court accepted it as a tax, meaning you are mandated to get health insurance. You could not be a healthy young man just getting just taking regular care of yourself and not having insurance. Well, why is that important? Well, because people could actually get regular insurance at that time for very inexpensive amounts. All of a sudden, what happened? We increased we made it so it was mandatory to get insurance, and we said you have to pay for this, 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 and this. It's like, I'm not going to be pregnant. Why do I have to pay for a pregnancy? Well, because they wanted to distribute the money to everyone. Now, at the same time, young men are taxed a whole lot more when it comes to auto insurance, but we're being taxed the exact same for pregnancies. No, it wasn't just that. It was everything from abortions to other things that you might not agree with as well. And because of this, it's been in lawsuits ever since. And actually, during Donald Trump's, they actually repealed parts of it, not the whole thing. So we're still living off of Obamacare. So what happened? After Obama, there was Donald Trump. Well, he cut taxes. Actually, it's really interesting. He just didn't cut taxes. Check this out. He cut taxes, but he also got rid of some tax deductions. They were eliminated for big businesses and high income earners. Tax loopholes were also closed. All those that their friends wouldn't the president's friends wouldn't have to pay taxes, or they got out of things. It was Donald Trump that got rid of a lot of those tax loopholes. individual tax rates were also lowered. And there was a boom during that time. So higher income earners were actually paying, what are they paying right now here? About 32%. When Obama came into play, it went up to 39.6%. And what did Trump drop it to? He dropped just to 37%. Look at this. This is under Bill Clinton and Obama, well, partially Obama, before he increased it. It was around 32%. Now, under Trump, it was 37%. So he didn't drop it much from what it was before that. And there's some other things you're going to learn about in the book as well. But let's go further. Okay, so I'm running out of time. I know I was a little long-winded. But let's go through a few more things. So this is... Okay, I'm going to have to go through this. The darker orange is capital gains. This is how much your capital gains tax, you're being taxed for your capital gains. This is every time you sell a house, every time you sell a commodity, this is how much is being taken out. If you win the lottery, this is how much is being taken out. Capital gains. The corporate tax, as you can see, skyrocketed, and then it come down and it's somewhat stable. Again, this is 2010. I wish there was a better graph, but this is just till 2010. And so the corporate tax has stayed pretty steady around 35%. It's actually gone up a little bit. And so, yeah, there you go. So as we talked about, this was thanks to Woodrow Wilson, this tax hike. And then it was dropped during Hoover. And then it skyrocketed again through Franklin Delano Roosevelt. And then it bounced up and down until, thank you, JFK, who dropped taxes. And then Lyndon Johnson jumped it again, and then it dropped again. And ever since, actually, that right there was Reagan. And then it dropped again. That again was Reagan. And then Bush increased it, and so on and so forth. So it's been up and down. What are some other ways that... Oh, I said I was going to show you the tax brackets. So as of 2024, so this is the taxes you're going to be paying this year. Everything everything under $11,000 is free of taxes. And this is for the single side. And if you're married, this is the amount that you'd be paying taxes on with your joint income. Okay, so this is interesting. So why is it a single, you get to make $609,000, and a married joint, you get $731,000. This is two people. This is one person. It seems like they're demonizing those that are married because they don't get as much of a tax bracket as if they filed both single. Huh. Interesting, isn't it? But the interesting thing, this is not how much the revenue of the government. This is just the way that they put this together in this display. You want to see what the government claims from these people? From each of these brackets? It's right here. The bottom 50% of people pay less than 5% of the tax revenue that the government collects. Between 5 and 10%, about 10% of the revenue. 25 to 50, up until 2020, actually it dropped. Look at this. Between 10 and 25%, that's also dropped. Between 1% and 5% of America, the top 1 to 5%, is down here. Top 1%, for all those people that say that the millionaires and billionaires need to be able to pay more of the taxes, they're paying about over 40% of the taxes that are collected every year. And remember, I'm a medium, middle income person. I don't even make high income. I have my house paid off, but I'm not high income at all. So here you go. That's what happens. So this is what you need to see. You shouldn't just say, oh, the rich need to pay more. Well, how much are they supposed to pay? Are they supposed to pay all their money? Because that wouldn't be fair. They work harder than you do. Truthfully, they work harder than you do. Most business owners work harder than most individuals in the United States. And yet we're obligated to pay more. So what would it be if the harder workers actually had to pay the same amount as those that did not pay or work as hard? We're all incentivizing harder work. Now, not based on the amount of money. I'm talking about harder work. Heck, frick, I would be I would be in the top 1% of the harder workers. And hopefully I'd be paying equal with everyone else. Again, I don't make a huge amount of money. Not yet. I'm still working for that. Okay, let me talk to you about some of the things that the government has done to be able to get more of your money. Okay, or what they want to do. So they want to do a wealth tax. Really fast, what is a wealth tax? This is something that's being pushed very, very aggressively by Senator Elizabeth Warren and Bernie Sanders. Basically, if you have property, or if you have a commodity, or if you have a stock that's not in your retirement, they want to charge you for how much the value has increased before you even take it out. So say you have $100,000 worth of investments, other investments. They want to tax you on those other investments. Now remember, you might actually be low income, but if you have $100,000 in investments and putting all that money back into the business, they're going to tax your wealth. That supposed assumed wealth is what they want to take your taxes from. Wait a second. I'm not going to sell my business just to be able to pay my taxes. I'm not going to sell all my commodities just to pay my taxes. I'm not going to sell all my stocks just to pay my taxes. It's because you have not sold those things, and yet they want money from it already. Well, what happens? You know what happens in the stock market. The stock markets go up, they go down. They go up, they go down. They go up. That's when they're going to take their money out. What happens if it goes down? Are they going to give you money back? No, they're not going to. So Elizabeth Warren, this is a shout out to you, and Bernie Sanders, you are so wrong. Don't hurt the normal Americans, especially those that are working hard to get things done. Now those two, there's actually a few more, but those are the two major people. And this, what I'm talking about right now, has nothing to do with politics. I'm not talking about to any party, whether you're Democrat or Republican, whether you're Green Party, progressive, liberal, socialist, or communist. Does not matter. It has nothing to do with politics. It means you're taking more money out of my pocket before I've even earned it. How horrible is that idea? Okay, now, what about the value added tax, the VAT tax? Now, they actually use the VAT tax in Europe, which is basically a federal sales tax. It's basically what it is. So you're going to pay your city and local sales tax, but now the federal government wants a tax also. Now, if you want to get rid of the income tax to put the value added tax and those that spend more for items, great. That is fine with me. I don't buy much. I save my money. I invest my money. So if you want to put a value added tax on everyday sales, yeah, people are going to come for you. But let's get rid of that income tax. Let's not put one on top of the other. You're going to be taxed just like anyone in Europe. And people living here don't want to live in Europe because it's taxed so much and regulated so much. Here we actually feel freedom. Okay, so let's go on. President Biden's plan. Okay, so this, again, the book was written in 2022. We're actually updating it before it goes out. And this is why it's taking so long. But what is happening with Joe Biden's plan? Okay, so he wants to actually increase everyone's taxes. He says it's not going to be increased for anyone earning under $400,000, but it's not true. Because what happens when you tax the rich? Well, they always find ways of getting out of paying taxes and legally getting out of paying taxes. Whether it's loopholes, whether it's putting money into businesses and not paying for more employees, they can do that. So look at what happened in California. In California, what happened? They increased their minimum wage tax for fast food restaurants to $20 per hour. You know what happened to the burgers there? They almost doubled in price. So right now, there was a person going on social media and showing the menu at a California fast food restaurant. I think it was McDonald's. And the McDonald's value meal, the meal, was now $20 per meal. Do you really want to pay $20 a meal? How much do you pay right now? Maybe $8 to $10 for a McDonald's meal. $20. And what happens to the employees? Well, they get replaced by kiosks and by robots. Sorry, that's what Joe Biden's plan is doing. Also, he is doing other things, such as he increased the amount of IRS agents. And supposedly they're going to go after the rich. But what happens? What's the report that just came out like a few days ago? Saying every time we increase the amount of IRS agents, we actually increase the amount of who being taxed or who being audited? Yeah, the middle, lower, and medium income. All those people, everyone earning under 400,000 actually have more audits on their income. Okay, so I got one last thing I want to show you, and I know. We're very long-winded today. Already hit 40 minutes. Let me show you. Whoops, I don't want to show you that. I want to show you the one I already brought up. There it is, the IRS. Look at this, helping people understand to meet their tax responsibilities. Yes, as I said from the beginning, it is our responsibilities as U.S. citizens to pay our taxes. You are obligated, because you are represented in D.C., to pay your taxes, even if you don't want to. But they're helping people? No, they're finding ways to get more of your money out. And yes, there are nice people there. Again, I stated this before. There are very nice people in there. Let me show you the W-4 form. Okay, I'm going to have to grow this just a little bit so we have everything. This is what you put in for your employees' withholding certificate. This is how much you're going to be paying every paycheck towards your federal income tax. I'm going to show you how you can pay less. And everyone is obligated to do this unless you want to pay more taxes. Then you're obligated to stay within the law. So in here, you're going to say, okay, look at this. Claim dependents and other credits. Okay, so this is basically for if you earn under 200,000 or 400,000 if you're married jointly, joint earners. Multiply the number of qualified children under age 17 by 2,000. Anyone above 17, it's 500. So you put that money in. That's going to be deducted. You're going to be exempt that amount of money for your taxes. Then under that says other income, not from job. Well, if you want to take more money out and give it to the government for a side job that you're doing, go for it. I'm not doing that. I don't think anyone else wants to do that. You are not obligated to put any money in this area. And you shouldn't if you're smart with your money, because you're not going to give your government any more money than they're obligated to receive. And in the end of the year, if you owe them taxes for that side job, great. You are obligated to pay that amount, but you are not obligated to pay them early based on that. Okay, deductions. Okay, most people go with the standardized deductions. If you go with standardized deduction, see, it says go to page 3. Okay, so go to page 3. This is multiple jobs and workshops. So they want you to basically report yourself for multiple jobs. You have no obligation to fill out this portion and get that out. That's if you want to use the government to create a savings account for your money until the taxes are paid. Open a savings account and put your possible taxed money or taxable money into it. Keep it there. That's where it needs to be. That's where it should be. Okay, going down here. Standardized deduction. If you're married jointly, this is how much you normally make. If the last year you paid $40,000 towards your deductions, put that in there. You're actually supposed to enter how much your estimated 2024 itemized deductions will be. That's the first row. That's right. Anything that you earned last year and you think you're going to be deducting the same thing, sorry, not earned, but deducted from your taxes, should be here. Let's see. And medical expenses exceeding 7.5 of your income. There you go. You can also, this is also adds to your home mortgage, charitable contributions, state and local taxes, and so on and so forth. Go there. Enter basically the amount that you would have for your standardized deductions. It would be right here. And so forth. You can actually go through this. But this increases the amount that you should be able to be exempt from paying. So all of this money that you put here and for your children, everything that basically up to that point, when you earn to that dollar amount, that's when you will start paying taxes on your amount of money. And you can go through these. This is actually a form I would actually say you should read. You should get to know this form. You can actually deduct money from this, from the money that's being withheld. Okay, increasing your benefits, your employee benefits. Now, the federal taxes are already taken out, but if you start paying for health insurance, life insurance, retirement, those type of things, that'll also be taken out of the amount of money that your government can withdraw from you. Sorry, your company withdraws for you and holds it for the government. Okay, so increasing your employee benefits. There's other ways. I'm not going to hit all of these, but your IRA, accountable plan. So reimbursements for like medical expenses and such. Rethinking whether you're going to file married or single. Your child tax credits. Standardized versus itemized deductions. Standardized is the exact same amount. Everyone is deducted. Or if you are deducting more than that money, itemized. Now, just so you know, if you itemize your deductions, you are probably under a higher possibility that they are going to audit you. And things that you can pull out really fast, charitable donations, 501c3s. If you give it to them, you can write off on your taxes. Claiming your kids, friends, relatives that you support. You can actually claim that as well. You have to talk to your tax attorney. They'll actually tell you more, tax accountant. Okay, tracking your medical expenses, very important. You can actually deduct that as well from your federal taxes at the end of the year. Deduct your state and local taxes, yes. Student loans as well, interest, just the interest. Child care, child or dependent care. Earned income tax. State income tax. I said city and local. State income tax also. So also some ways to get into it. There's so many more things. I can't cover this and I'm so far out of time. So thank you so much for joining us on this great episode. Get the book. It is actually coming out very soon. Get the book. It'll tell you all these different things of ways to getting out of paying your taxes legally. So get the book. There's so much here. There's so much here. This is everything that I've learned and other tax attorneys have learned over a long period of time. This is all made through experience. And if you're a youth just coming out of high school and going to a career, or if you're a college student that's about to graduate and go into a career, this is what you need to know. This is what everyone needs to know. So again, one last time, buy the book. Listen to this podcast. We've got so much more in store for you. And if we haven't made you a debt-free millionaire zealot yet, we will. Just stay tuned. Thank you so much for joining us, and we will talk to you soon. Bye.